Hello, it's Kei from Japan. Today I will talk about how to set your eyes on one direction when you look at a chart so that you won't be fooled around by its movement. Sometimes the market looks to be uptrend or looks to be downtrend. Like sometimes the market looks lower high, higher high, and it's a bull trend, or lower low, higher low, and it's a bear trend. But unfortunately, the actual chart is not that simple. It's way more complicated with many different types of patterns, and that's the reality when you actually look at a chart and trade. So today, I will teach you how to differentiate whether it's still a trend or not with just one single chart pattern, so that you won't be fooled by Mr. Market anymore, right? So if you like this topic already, please press a good button and make sure to subscribe to my channel for my future Forex videos like this. So let's get started right now. For most of the traders, buy or not to buy, sell or not to sell are the questions after all. And you'll be asking yourself these questions if you're not clear about the momentum of the market. So today, I will teach you how to check the momentum clearly with one single price action. And after you watch this video today, those kind of questions will be gone, hopefully. So this is very important, right? So here we go. Here is the only thing I want you to know about trend. That is, a trend continues until a reversal signal appears on the market. A trend continues until a reversal signal appears on the market. Now look at these lines. First of all, let me clarify what the trend is. You may already know this, but just make it clear. A definition of a trend is when the price moves lower high, higher high. This is a typical bullish momentum. And when the price goes lower low, that's called bear trend, right? And remember what I said earlier? I said a trend continues until a reversal signal appears on the market. So if you look at a chart like this, you can say that the trend is going as long as it marks lower high, higher high, or higher low, lower low, like these lines. There's nothing to worry about buying or selling towards the opposite direction. Now let me take you one step deeper. I said highs and lows decide uptrend or downtrend, but do you know there are two kinds of lows and two kinds of highs? Today I want you to remember another concept that are pushback low and pullback high. And these are the special lows and special highs. Look at these charts. And look at the chart on the left now. What pushback low means is that it's the low that succeeded to break the recent high, the point A, upwards. The chart went up to A and pulled back to B. Then it's pushed back up, right? And it breaks the price level of point A upwards. Now look at D. This is another low, but this one could not break the high, the point C, upwards. This one actually failed to break it through, you see? From the point D, the price went upwards, but it could not break the price level of C, but instead it marked the point E and the price dropped downwards. In this kind of situation, this low at D is not as important as B because it did not have enough power to push the resistance line at C upwards. So again, B and D are both the same lows, but now you see they are very different. The B is a special low that it succeeded to break the price level of A upwards, but the D is just a low that it did not break the price level of C upwards. And it's just the same thing when it's on a bear trend. Like I said earlier, there are special highs and just highs. In this chart, B is a pullback high, whereas D is just a high. And the point is whether the high could break the recent lowest downwards or not. If you look at it, B could break the price level of A downwards, whereas the D could not break the lowest C downwards, and it stopped in the middle of the way, and it marked E afterwards. Now, why I show this to you is because I wanted to be able to feel the power balance on the market. Again, look at the chart on the left and look at the point A. What this was is, as you can see, the price pulled back at this point, so obviously this is the price level that's likely to be sold, and there's a kind of pressure from the above for the price not to go upwards, and that's why it marked the high here and the price went downwards, right? Because until the point A, the price kept moving up, but somehow it was resisted at this level and the price went downwards. So at this level of point A, there is a big pressure to sell here. You can feel the sell pressure is hiding around this area. However, the wave towards the upside from B got succeeded to break through the point A upwards, right? So that means even if there's a big pressure to sell in this area of point A, at the same time there was a big pressure to buy produced from the point B. So there was like a battle between sell from point A and buy from point B, and eventually B won the game. So that means B has a big amount of buy pressure than sell from the point A, and you can see the momentum as a result. So with that in your mind, look at D now. It could not break the price level of C, right? And not only it didn't reach to the point C, it's resisted even lower price level at E, and now it's going backwards. And when you compare the buy pressure between B and D, it's obvious that B is much stronger than D. So when you look at a chart, make sure to check which one, which low is the pushback low and which low is not the pushback low. And it's exactly the same on downtrend. You just go opposite way. And if you know the difference, then you won't be fooled by the price actions right in front of your eyes, because your eyes only look at one direction, nothing else. Now, let me teach you how to apply this on a chart practically. So imagine if there's a chart like this. The price went all the way up, and here it's been resisted, and at this point the price pushed back and broke the previous high upwards, right? I said this just earlier, and when the market moves like this, that means it's the bull trend no matter what. So never think of selling in this kind of situation, but instead you only think of buying. You only think of where to buy and not thinking about selling it whatsoever. And in this way, you can eliminate your second thoughts, and you can always set your eyes towards one direction. So instead of thinking whether to buy or sell, if you see a chart like this, you start to think, I know I will buy in this market situation, but where would I buy? And your eyes are fixed on buying only. So those who does not know whether it's buy or sell, they first need to decide whether to buy or sell as they look at the market, and then they need to decide where to buy or where to sell, right? But in this way, you need to come up to some decisions, through a lot more complicated processes, and your performance will get low. But once you set your eyes on one direction, then the next question will be where to place the order. You only focus on where to place it as you look at the chart, and you wait for the right timing. Why this works is because it can increase your probability of winning. If you can imagine, let's say A looks for one answer out of 4 choices and B looks for one answer out of 2 choices. And of course, the person B has better winning rate than A, because simply the winning chance is twice greater than A, right? And this is the kind of thinking pattern you need to have when you look at a chart. You may have lots of thoughts and ideas from many different resources like indicators, time frames, or the signals that you look at. And if you're still struggling with those information, my recommendation is try to set your eyes on one direction by using the price action technique that I just introduced earlier. Like if you see its continuous lower high, higher high with pushback lows, and if you see the market is bullish in daily time frame, let's say, in that case, no matter what other indicators show its dead cross in providing sell signals, just keep looking for the reason to buy. For example, you can wait for the indicators to gold cross again, or if that's not the case, you can just go you look at the lower time frame like 1 hour or any smaller time frame and try to find price actions like double bottom, triple bottom, or gold cross signals or oversold signals, indicators, then you can place buy accordingly. Because if you think about the market as fractal, a trend starts from the lower time frame charts and it eventually affects the bigger time frame. Like when 5-minute chart becomes bullish, then 15 becomes bullish next, then later 30-minute becomes bullish, then 1 hour, 4 hour, daily, and so on. And this is actually how I see the charts with multiple time frame analysis. I always look at daily or even weekly or monthly time frame charts, and I set my eyes whether the market is in up or down or in a range consolidation. Then I look at the lower time frame chart to get the right entry timing according to the major trend. So just remember how it's important to set your eyes towards one direction so that you won't get confused by other views, and when you are not sure whether it's buy or sell, my advice is you better not to trade on that pair and wait until the time comes again, because the market is moving every day. So always better to trade with pairs that are easy to identify for you. And remember that there are 2 kinds of lows and 2 kinds of highs, and always look for a special high or special low that breaks the previous high or low up or downwards. And as long as you see the price extends toward that direction, it's a sign of continuous trend. But when you see the price does not renew the previous high or previous low, then that means it can be a signal of trend reverse. So you better stop trading and wait to see how the next price action plays out. Alright, that's it for today's video. On the next one, I'll be talking about Bollinger Bands and how I use it to make profit out of the market. So if you thought today's video helped your views on the market, please press the good button and make sure to subscribe and hit the bell so that you get notifications from my future Forex educational videos and live analysis. Alright? Stay gold. Cheers. またね。